Okay, so as we are getting ready for people to join us, just want to mention that we are also recording this session and we are live on Facebook if anyone would like to join us. Okay, we'll take a few more seconds just to make sure that people do join us. I still see some people in the waiting room trying to join this conversation.
Thanks, Sharon. First, great to see some familiar faces. Okay, good morning, good evening.
Sure.
Hey.
You know, it's a great opportunity for some of the familiar faces that don't really know what J Impact is to join us now and get some more insights about what you're doing, you know, personally and also for the group. This session is being recorded, first of all, just for you to know, and really we intend to have it as an open conversation. So I always say that the biggest difference between an open conversation and a webinar is really the opportunity for all the participants to try and join us in this, you know, virtual, maybe coffee session if you like. I don't know if you have coffee or if you have some water with you, but we really want to invite you to be engaged in the conversation. It's really not a monologue for Eran to share information about J Impact, but also an opportunity for you to join in the conversation. So if you have the option, we will really appreciate if you can share your camera so we can see you. Only if you have that opportunity, that would be great. In this way, we will be able to feel that this is a conversation.
Thank you, Sharon. And I think you forgot to mention, we have a test at the end. So, you know, it's really an opportunity for you to ask questions, memorize, you know, we're gonna quiz you right at the end. Okay, so thank you for being brave and being here.
Okay. All right. I know that we have still people that would like to join us, but again, we are going live, so we have some people joining us on Facebook. I know that Eran and I have so much to accomplish and to cover in the next hour or so. So we will let people to slowly join our conversation. So again, good morning for those that are here in California. Good afternoon if you are in any other part of the world. I guess if you're on the East Coast or if you are in Israel, good evening. My name is Sharon Vanek. I'm the Executive Director of the California Israel Chamber of Commerce. The California Israel Chamber of Commerce is a nonprofit organization that's been around, I don't know, since the mid-90s, so we are almost 30 years. Here really with a mission to enhance opportunities for different industry stakeholders to meet their counterparts. I'm very happy to see you here joining us today for an open conversation with Eran Sandhuas, the founder and managing director of J Impact. Hi, Eran. Good to have you with us.
Hey, Sharon. Good morning. Thank you for having me. And again, excited to see you know, so many faces, including some good friends from all over.
Great. So really the intention for us this morning is to learn a little bit more about this new impact venture that was born last year, to learn more about, you know, your focus, your interest, why are you doing it, what is the relationship to J Ventures, and also if we have the time and opportunity to hear from our guests today, about how they would like to be connected to what you're all doing. So really thank you, Eran, for being with us today and for sharing this, this information. Let's start with some information about you. Can you tell us a little bit about yourself?
Sure, just a little bit though. Okay, so just in terms of my background, first of all, born and raised in Israel, okay, pretty much for most of my normal childhood, been a nerd for many years. And then ended up in high school going to the United Nations International School, again, completely by mistake. This is somewhat relevant because it's actually a close circle now to what I'm doing today. And then I ended up going to the Technion, I did an MBA, electrical engineering. And then I spent 25 years in tech. So most of that career, about half of it, I ran large engineering teams globally. And the second half, I moved to run large global business units. And I've had the pleasure of doing that in Fortune 500 companies. I've led 5 global business units in those companies, mainly in semiconductor and at the end also in automotive. And the main common element behind all of them is that I ran startups inside of those corporations. I guess you have to be like a crazy Israeli to take on this really big challenge, to take on a small team and take on a big mission. And in these years, I actually learned quite a bit, how to form team, how to think about strategy, and also how to have one leg kind of planted into the future, imagining what the world is going to be like 5 to 10 years, and then, having one foot firmly on the ground, creating what needs to be created. So I've always been someone who, is focused on creating reality. And in the last 5 years after I left corporate, I moved into the area of investing. I've joined multiple funds and I've become an investor. And I've also done corporate development with corporations and advise startups. Most of them are in the area of mobility and transportation, this whole new world of advanced transportation.
You signed sort of like for 2 years in a row.
Okay.
2021, 2022.
Okay, I don't know if there is a question.
My best to keep this ranking in the future.
Okay. I think
you can
let me mute Ariel. Okay.
Yeah, and one last thing I want to add, just a correction. I'm the managing partner and co-founder of J Impact, and J Impact is a fund out of the J Venture Group. The other co-founder is Oded Hermoni that created this whole, J Venture Group that we'll talk about in a second.
Okay? Oh, okay. So great. Why don't you tell us a little bit about, what is J Ventures, what is J Impact Fund, and what is the relationship between the two?
Sure. So J Venture is a fund. It started out, first of all, by 2 people. One is Oded Hermoni, around 2015, and together with Jim Koshland, they identified, back at the time, about 7 years ago, that there's really 2 tribes in Silicon Valley, the Jewish Americans and the Israelis. And in most parts, these 2 tribes don't mix. And they said that there's a strategic opportunity, okay, and also a risk, okay, if that is not realized, of how to connect those 2 communities. And I think that, the Jewish people is probably the only people that the best way to connect them is through friction. So they were looking at what is the way to create friction. And the best way to create friction is to invest together. So if you put people around the table and they see investments together, then they'll debate, they'll express their opinion, they'll get to know each other. They'll do a bit of schmoozing before and after. And that's basically how the group was created, as an angel investment group initially, then it turned into a fund in 2018. And then the last bit is in 2020, late 2019 and early 2021, J Venture was formed. And the idea behind it was to take the same model globally. And what I mean by global is really to connect Jewish communities and all over the world. Now, there's well over 300 people inside of that community. These are people that invested in the fund. We call them members. Oded, by the way, coined the term called capitalist kibbutz, which is kind of like an oxymoron. The idea is that everyone works together towards a common goal, okay, shares a common set of values, but also benefits, okay, from what gets created. And this set of people, the 300 plus people that are in that group, are in every single continent you can imagine, with amazing people and amazing families from Latin America, of course, in Silicon Valley, and New York, and London, and Tel Aviv, and Australia. And it's really moving to see, every time we have those meetings, it's really moving to see the people show up from everywhere. The other thing I would say that is a bit different than regular funds is those people, those investors are active. In most funds, the investor put money, they get reports, they see money from exits in the future. In our fund, everyone is really active. They bring companies, we diligence them together, there's a discussion. It's really run like a community. And that's really the foundation of J Venture. Okay, so I think the question was on J Impact, how are we related?
Yeah, so this was J Venture, this is how it all started. Yeah. So how is J Impact Fund related to J Ventures?
So J Impact is part of the J Venture group. Okay, it's the first fund that is coming outside, I will say, inside of the fence that is called the kibbutz. And what I mean by that is that the J Impact was created organically. Okay, what do I mean by that? I had no intention of becoming a VC. Okay, this was not something I was planning to do. But about a couple of years, actually about 2 years ago, right in COVID, one of our members, Sir Ronald Cohen, gave a lecture on impact. And as a result of that, I thought, oh, wow, this is really brilliant. That's something I should do. So then I called Oded and I said, okay, let's turn J Ventures into an impact fund. He said, we can't do that, but why don't we go ahead and open this and we'll support you. And that's what happened. So today, the way that J Ventures run, the way that J Impact is run is J Venture is inside the management of J Impact. Okay, so it's inside of the general partner. And in addition, we have our advisory and all the other members that are part of the group. Many of them, majority of them came from J Ventures as well. So it's almost like an offshoot. And we share a lot of the deal flow. We see things together. We share a lot of the diligence together, and we make decisions. Sometimes we decide to invest separately, whether it makes sense or not. And in most cases, we try to invest together as much as possible.
I see. So you corrected me earlier, and you said that you are the co-founder together with Oded Hermoni. Can you share who else is in your management? Because you said that there is a J Ventures, and you see a lot of the information together, and you oversee the leads that are coming. Can you share some more information about that?
Sure. Okay, so again, it's kind of different than a regular fund. We have multiple layers of management, of people that are getting involved. Okay, the first one is, of course, I operate very closely with Oded on a daily basis. The second thing is we have a set of people that work together with me to form the fund in terms of the strategy, the philosophy, all of that. And they started with me around 2 years ago. Today, many of them are inside of our investment committee, and they are really acting also as the leadership and the management of the fund. So we have 4 people inside of that group. We have Alon Ozer, who is the Chief Investment Officer of Omnia Family Office in Miami. They manage over $2 billion, and they invest in funds and other domains as well. We have Tali Dunovich from Silicon Valley. She's a tech exec and used to run Israel Venture Network, the US portion of it. So she's very versed with impact. We also have in Miami, and depending on the day, sometimes Miami, sometimes it's Detroit, it's Neil Schloss, who's the former CFO of Ford Mobility and treasurer of Ford. He's been there for 36 years, and now he's on the board of BNP Bank. And the other person in Israel, which is very important geography for us, is Ophir Azuri. Ophir is a long-time impact and non-impact investor, and he leads the technology investment of a group called Gandir out of Israel. And he's very, very involved in the impact world. He's part of the Impact Economy Forum over in Israel. And again, we talk on a regular basis as well. So those folks are, we interact at least on a weekly basis, sometimes more. And then the second piece is we have also a team of people that are passionate, okay, folks that are helping out as associates and other positions in the fund. They help with deal flow, with marketing, with strategy, with analysis. So these are folks that we work with daily. But the second piece is we have our advisory. We have about 11 people in the advisory, and those are people that we rely on to give us specific advice on either strategy for impact or specific domains to invest in. And then we have the rest of the J Venture community, okay, the 350 people. So again, we rely on them quite a bit, both for deal flow and also for diligence. So it's a big group.
I see.
Okay.
Great, thank you for that. It's very helpful to know who is behind J Impact Fund. I have a quick question for our audience. If you're able to raise your hand if you are already involved with some impact investment. Anyone in our audience can either raise your hand or virtually raise it. Okay, so I see Asaf. Okay, that means we have to share some more information about what is impact investment. So, Eran, you mentioned you heard Sir Ronald Cohen speaking about impact investment, and that moved something within you. Let's start from the foundation. What is impact investment?
Sure. So fundamentally, if we think about investment, it's really putting money to work, right? And with the expectation that you'll be making more money from it. Mm-hmm. Impact investment is really the marriage between capital and purpose. The idea behind it is typically we think that we can either create an impact, or we want to see a company do good, or we should invest in it that it will do well financially. The idea behind impact investing is putting money and capital to work in companies that can do both. Okay, so they're both going to make a big financial return, and in addition, they're going to make a big impact in the world. And what I mean by that is that we're going to take a look at what the product or service actually does out there, and what does it actually do for human beings or the environment. Okay, so there has to be an intent behind it. So some examples to think about, like you can think about like Tesla or Impossible Foods or Beyond Meat. Those are just like common examples that you can think of that to do both. It's not one or the other.
Okay. Thank you. By the way, you guys, if anybody has a question, you can either use the chat box to write your question, or you can raise your hand, and Eran is happy to answer any questions that is coming from our audience. So we don't need to wait until the end, so feel free to just jump in and ask your question. You know, when I was reading before our meeting today, I came across all kind of acronyms like ESG, SRI, impact, and so on. Can you explain what's the difference between them? What do they stand for, and what are the differences?
Sure. ESG is currently, I would say, more in the mainstream or becoming mainstream in terms of investing. It's the acronym means environmental, social, and governance. What it really means in human words is that you take a look at the way that the company behaves. Okay, how do they conduct themselves in terms of the waste, the environmental footprint, and how they treat people? And most companies today have already some policies on how they deal with sustainability, the environment. In some cases, they have declarations of where they're going to go. I would say out of around $90 trillion, which are capital under management, all sorts of assets that are invested today, about at least a third right now are in the category of investments that are looking to be ESG positive. So for example, BlackRock and TPG, I mean, those are huge funds. They already declared several years ago that they will only invest in companies that are ESG positive. So again, that's the way that the company behaves. Okay, so it's really the DNA. Okay, and the second question was on impact, I assume, right?
Right, so we said ESG, SRI, and impact. Those
okay, so let me
explain what is impact. People are talking about.
Yeah, so impact investing is it's a subset of ESG, actually. It's really, as I said before, it's really around the actual impact that the company makes in the world. By the way, you can have a positive impact and a negative ESG. So you can have a company that creates, I don't know, electric vehicles, which is really great for the environment, but you can treat people very, very poorly. Okay, so that's an example of a negative ESG, and you can also be the opposite. You can be an oil company that is amazing for all the employees and all the stakeholders. Actually, it's probably not a good example, but I mean, you could be a company like in that category, and then you're going to end up, having a negative impact on the environment, but you're really great for everyone, to work in. Again, from our side, we look for companies that do both, and because it is important that the intent is there. And SRI is actually a bigger category, which is socially responsible investing. It's really the intention for any investment strategy to take into account either ESG or impact. Okay, that there's some marriage between your ideals and where your money is going. That's SRI. But beyond all these acronyms, really, I don't want to make this like an academic lecture. Okay.
No, not at all. It's actually very important, because I know you and I had already, some conversations in the past, and I came and I said, okay, what about this company? And what about that company?
Yeah.
And you'd always make it very clear, what is the difference between impact and what other companies are doing. So I think it's really important to understand the differences between environmental change, social responsibility, and impact. And we will talk later on about how you measure impact.
Yeah, and I'll give you some examples of the way to make it clear, because it's not clear. Okay, when I set foot in this domain around 2 years ago, trying to learn it, it's really not that clear. So it takes time to figure it out, and my objective is to clarify. But what I really want to say about this whole thing is that at the core of all of this is a paradigm shift. And what I mean by that is, Milton Friedman, many years ago defined that the purpose of company is to maximize shareholder return. Okay, so we are born into this paradigm. That's what we think that companies are. And what he didn't say, but what is actually happening is companies are maximizing shareholder return, and they're doing it at the expense of everything else, because no one else is looking. Okay, and as human beings, we win the game we play. And given that the game is to maximize shareholder return, what companies are doing today, unless they measure it, they're creating harm to people and the environment, and they're making great profits in the process. And the issue with this, by the way, is that at some point they pay taxes, and then hopefully the government steps in and fixes or corrects some of that. But if you think about what this means, that this is not scalable. Okay, more and more money is going into private sector, a fraction of it is going into public sector. Again, the gaps are increasing. The idea behind all of this, okay, ESG, SRI, impact, is to shift things forward, shift things in the other direction, and say that the purpose of companies is to maximize all stakeholders, to take care of all the stakeholders of the company. It doesn't mean that you're taking, necessarily taking trade-offs on your shareholders, but you got to take a look at everything else. And this is, by the way, really important. Just 2 weeks ago, the SEC approved new laws that now companies are required to report their environmental footprint. I mean, this is like a big deal. So this is not something that is going to start to be optional. This is something that starts to become mandatory now moving forward, and we're going to see big shifts in that area.
Thank you for that. Let's move forward and dig into the J Impact Fund. Can you tell us a little bit about the fund focus, in terms of sectors, industries, company size, everything that we need to know if we are a startup for that purpose and we would like to approach you or we would like to join the fund sometime in the future. Can you give us some information about that?
I can, but I'm gonna, as a good Israeli, I'm gonna answer the way that I want to answer. So what I mean by that is I want to first of all start not just answering that question plainly. I want to explain first of all what is going to be the impact of the fund.
Okay.
Okay, and this is a conversation that we worked with an impact strategist and I asked her, what should we measure? Where should we invest? She said, you're asking the wrong question. It's like, what's going to be the impact of your fund? Like, what's going to be in the world a decade from now after you guys are done? So, and that's, by the way, a big principle in impact investing. You want to take a look, like, what are you committed to at the end and then work backwards. So when we're going to be done as a fund, we will impact the lives of millions, positively, the lives of millions of people, and we're going to make a significant change to the environment, okay, which we will measure. Okay, so first of all, that's how we're going to end up. Now, the way we're going to get there is we are investing in areas that are correlated to that mission. And what I mean by that is, first of all, we're using a framework called the United Nations SDG. So that's the Sustainable Development Goal. That's a set of goals that the UN established many years ago for companies to create what's called a roadmap for humanity. Actually, it's not just companies, it's companies and governments. And the goal behind it is to get to things, for example, as zero hunger, okay, no poverty. If you think about it, those are really big statements at a global scale of 8 billion people on the planet today, and a lot of inequality. And when we take a look at those domains and we organize them, we really have three main priorities as a fund. The first one is to make sure that we have a sustainable planet. So none of this can work, including all of us sitting here and talking, if we can't breathe, drink water, just have the clean air and have the earth behind us produce what we need to produce. So sustainable planet is number one. The other one is sustainable living. We want to see human beings being able to live in a sustainable way, just normal way, earn a basic income and live properly with their families. And the last one is maximizing human potential. We want human beings to live into a better future. And the way that we're doing this is we are investing really in four main domains that are really, really big areas today. So the first one is health. We want to provide, affordable and accessible health to everyone. The second one is food. Okay, it is critical when we take a look at food that everyone will have healthy and sustainable food and access to food. Okay, that's not always the case everywhere. The other domain that we have is climate technologies, which is a big cluster. If we think about energy in other areas that are a subset of that. So we want to see that there's, again, energy to move the world. We want to see that all of this is done in a way that the climate is sustainable. And the last one is social technologies. And what I mean by social is not social media. Everyone in Silicon Valley, they think about social media immediately. When I say social, I mean education technology, I mean access to capital, things that can really move the needle for people to create what they want to create. And again, all those areas today, I want to talk about the why. Okay, why are we investing in those four areas? Because there's a huge need in those areas. Essentially, as a fund, what we're looking for is we're looking for scarcity, areas that there's just not enough, and we're looking for technologies that will turn the scarcity into abundance. That's a great way to make a lot of money and a lot of impact. So in climate, as human beings, we basically managed to break the planet. Okay, we've done a really great job digging up stuff, using it and polluting everything. And this is shaping, at the rate that we are going, this is shaping up to be a lot more expensive. And what's going to happen moving forward with forest fires and the changing in the weather patterns, etc. This is going to shape up to be more expensive than COVID, shelter in place, that everything stopped. This is that we're due to have every single year in our future for our children and our grandchildren down the road. And they're going to pay the price for that. So, this is something that I see as our obligation to fix. The second thing is health. Health and food. We already start to see that health and food, the prices are going up all the time, especially in the last few months, but it's gonna continue to be that way, and it doesn't scale. And that's a problem because everywhere you can't have people have sufficient health and food today. we're going to end up being around 10 billion people on the planet by 2050. That's that's a 25% increase, and we're just not going to be able to feed everyone. And so if we don't solve this, we're going to head towards wars over food, which is something that we have not seen for many years. And the socialists, when we take a look at the end for human beings, and I think all of us can experience this personally, when we don't live into a future that we like, we become very unhappy, and when we become unhappy, we become harmful. So it's really important for us to have the access for people to have the education and the capital that they need to create what they want to create. So there's upward mobility. So that, that's the basics behind it. And I do want to share with you one more thing. Last week, I attended a session. It was an agriculture technology conference. First one in 2 years that was in person. There were 1,600 people in person, which was amazing. And again, several thousand people over online. And one of the panels, there was a person from the Department of Energy from the US. And he started by saying, why am I here? I'm not from the agriculture ministry, like it doesn't make sense for me to be here. He said, the reason that I'm here is that we no longer have the luxury to just focus on reducing emissions. Okay, by 2030, we're going to have to, to reduce emissions by a lot, but we're going to have to now create technologies that will basically take carbon out of the atmosphere. And to meet our targets, we have to get to zero, then we have to go to negative. And to be able to do that, we need to remove around 10 gigaton of CO2 by 2050. And if we think about what that means, this is going to be the largest industry on the planet, okay, by mid-century. Largest industry on the planet, okay? We're thinking today, largest industry, we think about Apple, we think about Facebook, we think about, I don't know, Exxon, whatever that is. So they believe the US government is going to be the largest industry, and it says, for that to work, it has to be low cost and it has to be low energy. So we are looking at what we can do today with farmers to capture more and more carbon from the earth, okay, and do it in a safe and sustainable manner. And this is strategic for our survival. Okay, so you kind of got a bit of the color around that.
Thank you, Eran, for explaining the different sectors and industries that you are focusing on. So it was health, food, climate change, and social impact. Can you talk a little bit about what kind of companies are you interested in? Let's start with their stage, size, and so on.
Sure, absolutely. So first of all, in terms of stage, we mostly invest in seed and A. Okay, those are the phases. In terms of location, we mainly invest in companies that are based in Israel and the US. Okay, but we also see, sometimes really interesting stuff outside of those geographies. Primarily, I would say our philosophy is to invest in companies where we can help. Okay, so that's how we ended up in those areas, because we have the big network, the 350 people plus today globally, where we have expertise, and we have quite a bit. We have doctors, we have people in media, we have people in finances, etc., where we can help those companies. Then we can go on and invest in those companies as well. It also helps us because we understand what are we investing in, so we can better diligence the company. So we don't really invest pre-seed, because in those stages usually companies are just getting created, and they don't have enough muscle yet for us to help them and scale and open up new markets. And usually beyond A is a bit more challenging, because we're looking to get a certain financial return for the fund, and that's a little bit of a different game. We may have exceptions from time to time, but that's typically outside of strategy. Okay.
So just to repeat, you're looking at seed to A round companies, primarily if they are located in the US or in Israel. Is that correct?
Yeah, bingo.
Okay, fantastic. So another question that I have for you is, okay, so now we know what you focus on, and we know the size and the shape of the companies that you are looking at. How do you measure their impact? How do you know if one company actually fit your formula of being an impact or having an impact solution?
Okay, all right, that's an excellent question. One thing I didn't mention initially is the other difference with impact funds versus regular VC funds is we first of all always look at the financials of the company, and we diligence them like a regular VC to see that we get the return. But we also add another step, okay, or another thing that we run in parallel, which is the impact diligence. And that's very, very important for us, because we want to see, what the impact is really going to be. Okay, and then we have other ways that we can assess and evaluate it. So when we diligence, the financial side, that's easy. We all understand there's the general agreed accounting principle, GAAP. So it's a, that's a great way to basically go and quantify things in dollars, and we have some accountants on the line and you can go and measure. With impact, that's not been the case. There's actually strategic work being done on this in Harvard University, which is called impact weighted accounting. So there's work that they're doing, but until that gets created, we have to have our own subset. So what we deploy today is we deploy a few things. One is every company that we go to and we diligence, we have a pre-screening for their impact. We take a look really at the mission of the company, who are the founders, what is really driving them. And then we have another framework that is based on the impact management project, IMP, that we deploy. And what it means, we ask, very basic questions. So who is the target population? What is the product and service making? How, what does it actually do for that population? How much of a difference does it make? What are the alternatives that they will use if they don't use that? I mean, those are really good diligence questions anyway, but we quantify all of those and then we score them. And based on that, we take a look also where the company has gaps. Essentially, we always try to make sure that at the end of this process, we have a very good understanding of the net impact of the company. So this is another term I want to introduce. Net impact is, there could be positive impact and there could be negative impact. So you could have a company that creates a product, but in the process, their supply chain, they create a lot of pollution, okay, before they create the product and actually ship it out. So we look at that entire process and then we make the assessment of whether we invest or not. In essence, we have a criteria that we develop for ourselves, and we compare companies based on how many people they get to touch, in what way does it really make a difference. And for example, we will not invest in a company that creates, water in like different flavors for the top 1% of the world, for the rich people in the world. Most companies have a positive feedback and not necessarily a negative one, but it's not enough. We want to see things that really make a difference and really touch 1 million people plus. Or in the environment, it has to be something that really changes something in the environment. It's not like a very small fraction or small piece. The other thing that we do as well, which is also different than regular funds, is whenever we do investments, we also determine and we put it in our investment documents that companies need to report 1 or 2 KPIs that we agree related to impact. So to give you some examples, some of the companies we've invested in, some of the KPIs we set, we also, one of them is going, for example, to touch close to 1 million people in 7 years. The other one is going to touch 1.6 million people in 6 years. The other one is going to do 4 million people in 6 years. And we have a company that also recycles water. They're going to recycle over 1 billion gallons in 7 years. Okay, so those are the kind of things that we have, and the conversation we have when we have the process with the entrepreneurs is really interesting because we usually start the conversation and they usually come in to pitch as a regular VC and they start to give me all the numbers. I usually start by telling them, okay, hold on a second, tell me, why did you create the company? Like, what do you really want to achieve, with this company? Like, what will this company do in the world in 5 to 6 years? And usually they're shocked. Most people don't ask them that question. Okay, in many cases, they're actually really moved by the fact that I've asked them that question, because then we can have a conversation about what the intent, and all the numbers need to be there, but then, they fall into that context.
Great. By the way, quick question. Do you have those guidelines or something that you can share now, or we can share later on? Because you mentioned the differences, the way that you do the diligence with the companies, and what are the things your team would like to see. Is there a place where we can see it, or if companies would like to approach you later on, so they can, a checklist maybe that they can look at?
Yeah, so I haven't published it, it's in the works. Okay, what I have done, I published it with other VCs. So I already shared it actually with about 15 other VCs. Our goal is to try to get on the same page so we don't drive entrepreneurs crazy. Okay, and then we can complement each other so we can co-invest and invest, do follow-up investments together. But this is in the works. I have someone working on marketing and he's knocking on my door pretty much every other day that this will get done. So, hopefully within the next 30 days, we'll be able to publish a set of guidelines so companies will have an idea.
Okay, that would be great if you can share that with us, and I'll be happy to share it also with our network, with our community, for those companies that would like to see if they are even a fit to to J Impact Fund. Great. So you mentioned that you already did some investments. So my first question is, what is the size of the fund? Like, how much do you have to spend?
Sure. So the size of the fund is, we're going to be closing the fund, above $30 million. So it's going to end up between 30 to 40 million dollars. And in terms of by the way, one thing you didn't ask, and I'll say, is usually our average check size for the first investment is about $500,000. Our strategy is very different than other funds. So we don't lead, we follow. And again, our role is to expand. So the company, with that check size, they kind of get a very big advisory team. Think about it this way. Okay, that can help them in all sorts of directions.
Okay. Okay, so you mentioned advisories. What role do your advisors take, or the fund takes in those companies that you intend to invest in? Are you an active partner? Can you elaborate a little bit more about that?
Yeah, so first of all, look, from my perspective, when we invest in the companies, I work for them. Okay, simply put. So
they need to be ready for that when they're
Well, look, I can tell you, I'm in touch with the CEOs of the companies who invest in pretty much every other week. So I wake up in the morning, I think, what do they need? I send them connections. I send them, I get employees, people that are looking for jobs, whatever. When they're looking to do the next round, they typically confide in us. I will help them maybe with a deck, whatever they need, really. But fundamentally, we don't take a formal role in those funds. It's really more for a relationship. But again, given that we talk about the intent and the mission and all these things, the relationship tend to be very, very close. Okay, those are conversations we like to have and they like to have with us.
Okay, so actually those startups that you choose to invest in win not just the money, but also the relationship, the insight, the advisories and all of that without being there on a daily basis. So this is, I guess this is great, and probably they appreciate it. Okay, so let's talk about the companies you invested already in. Can you share some information about what investments you did already?
Sure. First of all, just one more thing to say. This is not just me, it's the entire community.
Yeah, of course. When I say you, I mean J Impact Fund. It's not Eran as individual, but the fund.
But they get, I've had already multiple cases that we had someone come in, they did diligence, and then they said, okay, I want to join the advisory of the company, and now they joined like the formal advisory board. Okay, and they work very closely. So, those relationships get formed in the process. And in terms of investments, we made so far 4 investments, two in Israel and 2 in the US. In Israel, we invested in 2 companies. One is focused on wellness, and the other one is on mental health. And the reason, if we take a look at what happened, first of all, during COVID for sure, but even before that, there's a huge mental health crisis. About a fifth of the world is in a situation that with anxiety and depression is like rampant, especially in younger kids, but also for adults. Again, I'm sure even many people on this call had a tough time at some point during the last 2 years. And for those reasons, we thought that those would be appropriate areas to invest in. Circles is a company that is dedicated to really making sure that no one is left alone. It was established by a guy who still actually lives in a kibbutz, and that lifestyle is something that most of us are not used to. But over there, you belong. There are people around you. There are people to support you. Many of us, if we think 3 generations back, our parents and grandparents, our grandparents used to live in a commune. Everyone lived together with the cousins. Everyone raised the kids together. We don't live that way now. So when we go to life events, we're pretty much on our own. Okay, whether it's difficulties with work, difficulties with spouse, divorce, loss, whatever that is. But the interesting thing is when we're put together in a group of people that go through what we go through, we immediately feel that we belong, immediately. And what these guys have done, they have 2 sets of technology. The first one is to get people to match them, okay, with folks that are going to exactly the same event, whatever that is. So think about it like Tinder for life, for life events. And within a few days, they place you in a group of folks that you immediately feel connected to and related to because they're going through the same thing. If it's divorce, you've been married for 10 years, you've got 2 kids, everyone kind of understands what this is going on. And they also have a moderator for those sessions. And the moderator, that's the second set of technologies, is really like a super moderator because the technology is running in the background and helps them to moderate the session in the most effective way that people will belong. And their job is to make sure it's not therapy. Their job is to make sure that people will start to support each other. And again, some of you know this, when you come in for help, if you can start to help others, it makes you stronger too. And the results are amazing, by the way. It's a really fantastic company with social entrepreneurs behind it, very experienced folks, ex-Google. They've got a top-notch team, and we're very, very bullish about them. The second company we invested in is Gray Matters Health. It's a company that is in the cross between psychiatry and neuroscience. Came out of research that was done in Tel Aviv University, they figured out how to detect the activity of the amygdala, which is sitting almost in the center of the brain. That's the area where we feel stress. So if you think about people that went through trauma, again, as Israelis, we sometimes hear, sirens going up and down. Still, for several weeks after, if we hear a motorcycle, we jump. And for people who go through severe trauma, very simple events can trigger them, even if there's nothing in reality that is threatening them. Now, today, psychiatry doesn't have there is some treatment, but it's not super effective. Treatment has been done in functional MRI, which is very expensive, multi-million-dollar machine. And these guys figured out a way to do an EEG cap that you put on the head, and they can basically detect the amygdala. And they put people in a training, in a feedback loop, so they can start to train themselves in a way that they will control their mind activity on their own. And the results are amazing. After a few weeks, you start to see that people with PTSD are able to alleviate the condition, and this is without any drugs or any medicine. So that is one piece as well, and that one again we invested with Amun Ventures, Maria Snaft, and a few others like a large Japanese conglomerate and a few other U.S. funds. So those are the folks in Israel, again, smart folks and hardworking. And in the US, we made two other investments. One is in a company called Epic Cleantech that has a technology and solution to recycle the sewage in the building. So think about the building, they're turning it to the Tesla of a building. So almost zero emission. They're able to recycle up to 95% of the water. And this is important because people essentially are moving more and more into cities, but there's no infrastructure to carry all those people. Plus in California, we're experiencing a drought, so that's a big problem. And as a result, there's now also regulation being set in to make sure that there's more and more buildings using this technology. And the last one, which maybe you'll relate to more than I do, at least personally, is a company called Joylux. They're in the women, femtech sector. Very proud about this investment. Can't talk from my personal experience. But it's a women-led company as well. Basically, what they're dealing with is menopause, which is something that's in the future of every woman, and then also every man that sits next to a woman. And today, most of the treatments for menopause, I'm being told that there's a lot of very negative side effects for menopause, and then for the treatment as well, which are hormonal. So this is a non-hormonal treatment. There's already thousands of women that are treated by them. It's a fantastic company that is growing very rapidly, based out of Seattle.
Thank you, Eran, for that. Okay, so you already made 4 investments, and for the sake for all those companies that are out there and are either listening to us now or will look at this recording later on, and they want to approach you and the fund and the other partners, what's the best way to reach out to you?
Yeah, I mean, the best way is they can connect with me. First of all, through people that they know. That's the best thing. If there are people in our fund that they know that can introduce them, that's perfect. The next one,
that's always true. Someone who knows someone.
That's always a good thing, and we have a lot of people. That's the good news. Okay, so I'm connected today, to quite a big set of folks. They're welcome to reach out also over LinkedIn, and they're welcome to email as well. My email is I can put it later on in the chat, but it's basically eran@j-impact.fund. So pretty straightforward.
Okay, great. So this is from the startups perspectives. How about investors? You said you have over 360 investors around the world that support the activities of J Ventures and J Impact. If someone wants to learn more and join you, how should they go about it?
Yeah, they're welcome to reach out in the same way. I mean, you can connect on LinkedIn or message me over email. Again, same email.
Okay. Great. I just want to remind our audience, if anybody has a question about impact investment in general, questions about, J Impact and their work, please don't be, Asaf, yes, please.
Hi everyone. Hi, Eran.
Yes,
I enjoy listening and learning about what you do. I was just wondering, I mean, so for instance, these 4 companies that you already invested in, maybe you can share how did you get to know them, or how they were approaching you? That's one question. And then maybe if you can say a few words about what's the ratio between the number of companies you see to the number of companies you actually invest in?
Sure, I'll be glad to talk about it. So first of all, about I would say 80 to 90% of our opportunities, investments, and companies, they come through our network, through the 300 and something people that we know. Like Gray Matter, actually, I found that company. I started to talk about impact, and then we got connected, and then it formed. With Circles, we got referred by one of our members in J Ventures, and the same happened with Epic and Joyluck. So those are people that are typically investors in those companies. They take a look and they say, okay, why don't you join us? So that's been the case. Today, at this point, we've crossed over 400 companies that we're looking at in terms of our overall deal flow. By the way, we started being operationally active really in, I would say, in early November. So it's been a very active few months. And out of the 400, we invested in 4. So the ratio roughly is about 1%. I think also based on the activity in J Venture we also see thousands of companies every single year. So that's typically been the case. Okay, roughly around that type of ratio.
Thank you.
Sure.
Thank you for that. If we have any other questions from our audience, please don't be shy, and you can join us and ask your questions. I'm sure Eran would love to answer it. I have a question for you, Eran. Is impact investment profitable for investors?
Absolutely. But look, first of all, you're asking the $1 million question, okay? And I think that every single one of our investors had to believe that to invest in the fund. Okay, and if you think about it, that's also the main paradigm that we're looking to break. Most people think about it, okay, I have philanthropy where I'm doing good, and I have my investments where I'm making money.
I know, that's why I'm asking, because it seems that, okay, I want to make an impact, then I will donate my money and I will support in other means. But and then there is a dissonance sometimes. I want to do good, but I also want to make money. So
here's what convinced me. Okay, look, I won't go into this if I didn't believe that, but belief is nice. At the end, there has to be some data. Okay, so I looked at a few things. First, the amount of money that's going into this. First of all, there's a need. Okay, what I mean by need is there's corporations today are declaring that they're going ESG positive, and they're putting real measures behind it. That means that they need to have tools, they need to have processes. All of that is a business opportunities for companies to come in, okay, to do that ESG transformation. The second thing, I'm taking a look at millennials. There's plenty of surveys. Those kids are not going to buy stuff that they don't think is going to be good. They don't want to work in companies that don't have a purpose. They want to feel that that they're working companies that there's a meaning and is aligned with their values. And by the way, you do see with startups that the ones that are mission driven have a much easier time to hire and retain people, which is a big topic in the last few years. So there's a real need. You take a look at what happened with COVID. There's social gaps increased. The climate, by the way, I don't think people understand it, but with COVID, when the entire planet stopped everything in 2020. The emissions in the climate, we only got reduced by 5%. This is when you stop everything. We can't afford to live that way. So, we're on a very negative trend. So there is a real need to deal with that. And governments, there was COP26 in November, okay, over in Europe that everyone participated, including from Israel, and, every country was there. And you take a look at the war in Ukraine, those also have to have implications with oil and gas and energy policy. So there's a clear movement now to create a whole market. What came out of COP26, the whole market of carbon accounting got created. You have that already in automotive for many years, but now countries came together and they said, okay, we're going to have to now buy and sell carbon offsets in order to go and really make the targets happen. So when you think about carbon offsets, this is going to be $1 trillion market plus when it's said and done. This is a huge opportunity, huge financial. And then I take a look at the amount of money coming in. There's more than 25x, okay, from a decade ago coming into this domain. So, for some of my friends that I talk to, they like to do surfing. So I explain to them, it's very simple. You want to get into the wave before it goes up, and you want to get out of the wave before it crashes. Okay, and we're at the point that the wave is going up. Now, not in every sector. There's some sector that is crashing down. That's why we have a very broad strategy for the fund that we're going to pick waves that are going up. But all of those areas, if we think about food, we think about agriculture, we think about health. Those are areas that there's going to be investment. Even if the economy is going to go down, even if it's going to be a downturn, governments are going to put money in those domains. And in fact, by the way, a lot of our companies, they also get grants, okay, which you typically don't see in other companies. So I really believe that this is going to be financially successful. There's already evidence, by the way, in 2021, we've seen a 50% increase in what's called double unicorns. So there's now 150 companies that have crossed $1 billion valuation and are also have a net positive impact in the world. And again, that was not the case before. So, I think the big concern for me is not whether or not we're going to make money, is are we really going to make the impact that we want in the time that we want at the end of the day? I think in many cases, by the way, when we take a look at technology, I know it looks like a lot of stuff has been done, but I really think that we're in day zero in a lot of sense. We're really at the beginning. Now we have everyone as a cell phone in their pocket. There's, compute is very affordable. You can run stuff in the cloud. A 13-year-old can now create a company and scale it. Okay, that was not the case many years ago. So, I'm optimistic on what the future will look like, and I'm cautious on what the financial, how we manage the financial, the way we're going to get there.
I understand. We have a question in the chat from David. I don't know if, David, you want to ask your question. I'm happy to read it. Would you like to ask your question, David?
Hi, everybody. Thank you, Eran.
Hi, David.
Thank you so much. Yeah, it feels like, especially with ESG, you're saying there's this huge wave we're going up right now. My question is, where does degrowth economies or circular cities kind of fit into your philosophy? The idea that maybe there's a way to stop the constant waves and crashes and create something that's even baseline. And how do we do that? I think that if we're doing it for waste systems like clean tech, epic clean tech, why not for entire economies kind of thing?
Yeah, so you're asking a great question. When I take a look at technologies that are coming in, some of them are completely brand new technologies. And the main issue is that it's going to take a long time for them to get deployed. Even if we think about electric vehicles, it's a small fraction out of the overall vehicles, and it's going to take several decades to cycle everything out. And when we think about waste, there's today around 30% of food, for example, gets thrown away. If we think about retail, clothing industry, the amount of waste there is tremendous. Okay, every single year there's a lot of stuff that gets created and then gets thrown away. So recycling is probably going to be one of the best bets to save us in the near term. So instead of throwing stuff away, we can reuse it. And then there's entire work in that area, like in Germany, for example, they passed a law now that retailers of clothing companies now need to recycle 25% at least of what they sell. And this is already starting in the next 1 or 2 years. And by the way, that spawns a new set of companies that deal with that challenge. So I think that recycling is going to end up becoming probably one of the more promising areas over the next 5 years, because it's an existing market that you're taking and you're changing. You don't necessarily need to create a new market. And obviously, that's always a good place to look. I wanna ask myself one question as well, Sharon, because.
Go ahead, ask your question, and then we have also a question from Rachel. So,
okay. So the question that I'll ask myself is, with all this money coming in, aren't you worried that a lot of it is just going to be greenwashing? It's just going to be money spent in areas. Companies are going to pretend like they make an impact, and like in many other areas, there's a lot of greed. You're going to end up actually not making the impact, and at some point, this is going to crash. So this is, first of all, a real concern for the impact industry. What I would recommend as well as investors and also as startups, be really diligent. I mean, we spend a substantial amount of effort to do measurement before we invest and after we invest and monitor things with the companies. And you want to make sure there's real measurement behind it. There's also real opportunities for companies with real tools to go and do it in such a way that is scalable. We've seen companies that deal with public, with monitoring public signals of companies that they can now feed into hedge funds and other areas that this can be real. But greenwashing is a real concern. It's now starting to become more popular, and when things become popular, people jump in, and bad things happen. So be cautious.
Thank you for that.
Yeah.
Rachel, you had a question.
Hi, my name is Rachel. I'm the CEO of EYES. We are developing an FDA-regulated product, and I was wondering what your philosophy is regarding products that are FDA, fall under the umbrella of the FDA or other regulatory agencies in terms of investing.
Yeah, so you ask a good question, because some investors shy away from that. I mean, FDA it can be unpredictable, and you can end up having a company like not get approved, and then now what, right? So what I will say is we don't shy away from it. One of the companies out of the 4 invested is going to be, is going through an FDA certification. But we do diligence very carefully, like what type of FDA. So as you know, there's different processes inside. Is it really trying to qualify based on an existing product? Is it a software approval? What kind of process needs to be done? When it's going to be done? Is there sufficient evidence that it can cross? Who was employed in the process? So we take a look at that very, very deeply. So I don't think that we're going to invest, only in companies doing FDA, but we don't shy away from it. And the same thing goes for food as well.
Thank you for that. Any other questions from our audience? Amit, would you like to ask your question or do you want me to read it? Amit? Okay, so we have Amit Brandon Kadosh on the line, and he is asking in a chat box. I have a question. Is targeting the cost of living is considered impact in the capital investor perspective?
So the answer is yes. What I mean by that is when we take a look at the company we invest in, a lot of them, like many other startups, they start with a product or a service that is fairly expensive, that is targeting a small population. And the conversation we have is, how do you get to service bigger population? How do you get to service underprivileged populations? And how do you do it in a way that's profitable, not as a philanthropy? So we do take a look at every single product or service that is out there of what's the roadmap to reduce the cost, because again, as you reduce cost, you increase accessibility. And that's really where it's inside of our impact questionnaire and the conversation that we have, okay, to understand the roadmap. So if the product is always going to be like $1,000 product, that most only very wealthy individuals can afford, probably not going to be a good solution for us. But if it starts as something that's expensive and then it becomes affordable over several years, that's a great one. And by the way, I want to tie it as well to the conversation we had earlier about profits and impact. One of the reasons, by the way, to invest in impact companies versus philanthropy, by the way, is fantastic. I think it's great to donate to good causes. I do it myself. The main thing with philanthropy, though, is that this is money that you're putting to work and it doesn't sustain itself, right? You have to put in more and more money into the philanthropy for it to do its job. With impact companies, when the companies create a profit, they get to reinvest it and the impact starts to scale up, and also the cost starts to go down, so they can make it more and more accessible. And you can really achieve very high impact in that way. And again, there's many good examples out there that have done that over the years. So the cost is a very big topic, okay, the cost of living. We take a look at cost of living for housing. We take a look at cost of living of food. We recently looked at a company that could do last mile delivery to the poorest populations on the planet and provide healthy food in a sustainable manner. So this is a big deal. But again, we take a look at it. Is it also financially viable? Is it a good business to do that? Does it make sense to do it? Can the company make money in the process? And can they, lift off in the way that we want them to do?
Well, thank you for your answer. I'm sorry that I couldn't respond to Sharon earlier. It's a really interesting conversation. Thank you, Eran, for all the insights that you provided. Along with my questions regarding the cost of living, if the company itself doesn't necessarily targeting a low-income income people, something like that, it is still eligible for the impact?
Yes, it is. Again, we take a look, this is really the hard part of this job, that it's very subjective, okay, that's the truth. People behave like it's subjective, it's not. So, we take a look, who does it impact, how many people, and look, it could be something that never reaches, like the poorest population, I don't know, in Africa or in India, and it could be okay for us. I mean, there's enough people that need help, across the US, in Israel, in other places, but we want to see that it helps a lot of people and not just a very small population, and we definitely drill into that.
Okay, so you say help. Does it necessarily have to help individuals, or is it something that's good, in general to the world?
No, we don't look at good in general in the world. Look, a lot of the stuff, I worked at semiconductors for 18 years. Semiconductors, you can claim that they do general good for the world. I worked at Wi-Fi, we connected people to the internet. Okay, so you can explain to yourself how it does good, and it does. Okay, but that's not what we're looking for. We're looking for the direct correlation. So, in many cases, if it's a B2B company, in some cases, if it's a B2B company and they're helping ESG or other stuff, we can make the correlation. But if we cannot make the connection, like sometimes people send philanthropic companies that deal with donation. I tell them, sorry, you're not a good fit because I don't know what's going to be the impact. Yes, more money will go into donation, but how can I measure, how can I know the actual impact on people on the other side? I have no idea, okay, how it's being used. So that's not a good answer.
Thank you, Eran. So looking at the time, really being cautious of everybody's schedule, and I really, really appreciate the time, first of all of you coming here today and joining us and learning a little bit more about impact investment, what it means, how we measure it, and of course the deep dive into J Impact Fund and the wonderful work that they're doing. I want to thank Eran Sandhuas for being with us today and sharing more information about their work. If anybody here would like to get in touch, please reach out to me. I'm happy to connect you with Eran. This session was recorded and it will be available on our YouTube channel. You can go back to the YouTube CICC YouTube channel and watch it over there. We are also happy to send you a link to the recording if you want. Eran, last sentence.
Yeah, first of all, thank you everyone for coming. And I do want to encourage you in terms of, if you want to have an impact, take a look where you spend your money and your time and just make sure that it's aligned with your values. I mean, each and every single one of you can make an impact and a positive one. Okay, so thank you for being here.
Okay.
Thank you. Thank you very much.
Thank you, everyone. Thank you.
Bye.
Wonderful
Bye.
rest of your
Thank you,
day.
everyone.
Thank you.
Goodbye.
Thank you. Have a lovely day, everyone.